What's going on, guys? I'm Tony, the Realtor. Today, we're going to talk about DSCR loans and what they actually are. I have Colin from Nexa Lending.
Yep.
Right? And we are going to explain in total, like very straight to the point, what that loan type is. So, Colin, who is this loan built for?
It's built for the savvy investor, the client that understands how to properly cash flow properties and look at their investments the right way.
Perfect. So if you're sitting at home and you have your own property right now, you're the first time home buyer who saves their money, you got some money in the bank, and you're like, what should I do with this money? And you're thinking, should I put it in the bank? Should I put it in a money market account? Should I go buy an insurance policy? Or should I put it in real estate? And more times than less, real estate is a pretty safe bet, right? So a DSCR loan is your ability to purchase a multi-unit property without the bank needing to worry about you qualifying via income levels, okay? A lot of the time when somebody wants to buy a property with like a conventional loan and they already have a whole house, the bank has to take a look at their income to make sure that they can sustain both the mortgage and they can cover the, the multi-unit, the investment. In this case, the DSCR loan is like, hey, put down 25% of the cost of the property. And all we care about is if your mortgage payment ends up being something like, an example, $3,000, does all the rents that you're covering, the total rents you're collecting from that property cover the mortgage?
Right.
Is that a good assessment?
Absolutely, yeah.
Perfect.
Spot on.
Perfect. So if you are somebody who's sitting there with money in the bank and you're like, you know what, I wanted to buy a property, but I have 2 car payments, I have a house, I have a bunch of credit card bills, a bunch of Visa, I have a bunch of Visa, MasterCard, Discover, and all that. Mm-hmm. And my DTI, my debt to income ratio was so tight, the bank would only lend me 50 cents. This DTR loan would allow you, the DSCR loan would allow you to step in and buy a property. Now, what are the credit restrictions on this?
Ideally, you want to have a 680 or above, but I have investors that go down to 620.
Okay. When you say you have investors that go down to 620, how is that? Like, where does that come from?
So that comes from the fact that we have over 285 lenders at my disposal as a broker.
Perfect. So he's a mortgage broker. So some banks, if you go to the bank will look at their sheet and they'll say, what's your credit score? And you'll say 640. They'll say, ooh, you got to have a 680. Have a good day. He won't do that. He'll take a look and say, ooh, you don't qualify for this one, but there's 285 others that I could pull from because he is a mortgage broker.
Right.
Okay. So down to 620, yep. Preferably 680.
Right.
Don't need to look at anybody's income.
Correct.
But when you actually are going to go and collect documents to get somebody like actually approved for the loan,
right?
What kind of documents are you going to be asking for?
I just need 2 months bank statements, credit report, and then the entity documents because most DSCR loans are held in an LLC, depending on state regulations.
Perfect. Okay. So guys, if you have any other questions specifically about the DSCR loans and you want a better explanation, my guy here will be able to give it to you. But thank you so much. Make sure you like, subscribe. I have property tours on the channel. Go watch the property tours. But for more information on DSCR loans, you'll find Colin's information in the comments down below. So take care, and thank you for watching.
See you guys in the next one.